Hello everyone, my name is Majid Rahimi and you're watching the first video of our classical technical analysis course. These videos need some basic information about markets and some platforms for trading. So if you think you might need this information, watch our Forex basics videos here. First, let me introduce this whole playlist. When we are talking about classical technical analysis, we mean that we're going to manually look at charts, search for price patterns, support and resistance levels, trends, and so on. Then using some trading tactics and develop some trading strategies for trading and managing our portfolio. Saying manually doesn't mean that we are going to print charts, work with pencil or something. We mean that we are not going to use robots for automatic trading using some indicators based on computer calculations. For now, we will study and operate in market with human resources. We will talk about automated trading in another playlist and after this video. Our base of training is CFTE certification, so I can assure you that you are in the right path of learning technical analysis. If you think that this fully free course is for you and you haven't subscribed yet, it's enough to click on subscribe button and notification bell under this video. Okay, let's start. In this session, we will get some information about fundamental analysis and technical analysis definitions. And then we will talk about charts. In every market, investors have two main questions: what to buy or sell, and when to do this. Answering these questions properly make money for lots of investors. Investors use two main approaches to answer these questions: fundamental analysis and technical analysis. A fundamental or statistical analyst uses many statistics to decide about markets, like auditor's report, the profit and loss statement, the quarterly balance, etc. And he should consider many elements to evaluate things he wants to buy or sell. After evaluation and watching the market price, deciding would be very easy. But the problem is that we have some challenges evaluating things. Let's see what technical analysts say about this. Technical analysis is the science of recording the actual history of trading, like price changes, volume of transaction, etc. in a certain stock or in the averages, and then deducing from that pictured history the probable future trend. Technical analysts say that it's hard to evaluate stock with only statistics, and they have many examples which shows that even with similar statistics of the same stock over time, the price of that stock has lots of differences. This is because the price in every market is only determined by demand and supply. So price can be affected by many other factors like hopes, fears, moods, or needs and resources of potential buyers and sellers, which cannot be obtained by statistics. Technicians also say that even if we can gather all statistics together and after synthesizing them, we say a price and value for some stock, it would be too late because our statistics are for past and market is not interested in past or even present. It's just looking for future. Technicalists claim that price, which is made by market itself, have all the information of statistical analysis and even other factors which might affect price inside it. In fact, all of these factors are creating the price change procedure. The next thing about technical point of view is that price moves in trend, and this trend tends to continue until something happens to change the supply-demand balance. These changes are also detectable in the action of market itself. So by these definitions, we are not surprised when a market technician says that he can trade in some stock that he doesn't know even the name of company and make profit. This way of trading is not advised, but in theory it's possible. Well, by knowing some information about technical analysis itself, it's time to talk about charts. Charts are one of the most important working tools of a technical analyst. We make charts from almost everything. Charts can have many different appearances. We will talk about some of them in this video. The most important chart we are going to work with is price chart. You have seen price charts in previous videos. Let's take a closer view into this chart. A price chart is made up of two axes. The vertical axis is for showing price, and as we go up in this axis, the price is going up. The horizontal axis is for time, and as we go forward from left to right, time is going forward. So this chart can show us the relation between time and price. This chart is made of three different kinds of units, and we can choose between bar charts, candlesticks, and line charts. In the pictures of this slide you can see the same price chart of a pair with these three different units. As you can see, they have some similarities. So let's see what these units can tell us. First, let's look at bar charts. If we consider these bars in a daily chart, each bar contains four prices. Open price, which shows the first price of the day, and it's for the time which market opens. Close price is the last price before the market gets closed or a new day starts. During the day, we have so many prices. The highest price of the day gives us the high point, and the lowest price gives us low point. If the close price is higher than open price, we can say the price is increased and our bar is bullish. In the opposite situation, when the close price is lower than open price, we can say the price is decreased and our bar is bearish. The names of bearish and bullish come from animals and because of their ways of attacking. Bulls throw up their enemies with their head. So when price goes up in any aspect of view, we use bullish for it. Bears use their hands to hit their enemies and put them to the ground. So when the price goes down, we use bearish for it. Candlesticks are similar to bar charts, but instead of lines to show open and close price, we use rectangles with different colors to show bearish and bullish candles. In this picture we used white and black. In many charts you can see green for bullish and red for bearish, and you can also design your own candles. Because of their appearance, candlesticks can show us price action better, so it's being used by lots of traders. If we use only close prices and connect them to each other with lines, we have line charts, as you've seen in our previous videos. As you see, line charts can only show us close price and we lose the other important prices of that period. So we prefer to use candlesticks instead. We can use different units of time to get more information about price action. We have charts for 1 minute, 5 minutes, 15 minutes, half an hour, 1 hour, 4 hours, 1 day, 1 week and 1 month in MetaTrader. In these time frames, every candle or bar represents that amount of time. This means that in H1 chart, every candle is the price action of 1 hour, for example. Well, let's see these features in MetaTrader.
Okay, now in MetaTrader we can change the appearance of this chart by right-clicking on the chart and going to properties. We can change the colors. Let's come like this. You can see the preview. We can choose some features here. For example, show open, high, low and close in the chart, or show ask price line as a separated line, or remove the grid from the chart. And in this tab we can select between bar charts, candlesticks or line charts, and we can change the scale for zoom out or zoom in, and finally we can confirm it and you can see what happened in our chart. You can save your changes by right clicking and choosing save template and then writing a name for it, for example test, and then in another chart you can recall your template by load template and choose test, and you can see every changes has been made for that chart. You can also do this changes from the top of MetaTrader. Change, for example, view to candlesticks or line charts, zoom in and zoom out, change the way of arrangement of the charts like this, and also you can shift your end of your chart into left, and this is for bringing you back to the end of chart of present time. And now about time frames, you can see that this chart is in time frame of H1, means 1 hour, and every bar represents an hour. And for example, you can see that this bar we're on it is for 12 o'clock of 3rd of December of 2019. The next candle is for 1 hour later and for 13 o'clock of that day, and you can go forward and see that. If we change it for M30, which is 30 minutes, you can see that every bar represents half an hour. For example, this is 6 o'clock at PM, and this is half an hour later, and for 6:30 PM at that day. When we change that to candlesticks, you can see every candle represents that unit of time. If we change it to weekly, every candle shows a week. You can see the dates of every candle. Okay, this video comes to its end. We're going to talk about the Dow theory in next video. I expect you to have some practices in MetaTrader on charts. Don't forget to give us your feedbacks in comments. Thanks for watching. Have a good time and bye.